Welcome to Capital Gains, Yahoo Finance's unique look at how U.S. government policy could impact your bottom line. I'm your host, Madison Mills. Reciprocal tariffs at the top of President Trump's agenda. Trump ordered federal agencies to calculate new tariffs to match those of other countries, a move that could shake up long-standing international trade rules. The tariffs will not be implemented right away. That will happen after negotiations with affected nations.
I have decided, for purposes of fairness, that I will charge a reciprocal tariff, meaning whatever countries charge the United States of America, we will charge them. No more, no less. In other words, they charge us a tax or tariff, and we charge them the exact same tax or tariff. Very simple.
Trump hopes the tariffs are a revenue builder on the country's balance sheet. Meantime, Elon Musk focusing on cost cutting. The Tesla CEO spoke in a press conference from the Oval Office alongside the president this week. So what does this all mean for the economy and for your bottom line? We're going to get into all of that today. Plus, Tax Foundation Policy Analysis Director Garrett Watson is stopping by the show to discuss all of this and more. First up, I want to get into it with my co-stars Rick Newman and Ben Werschel joining me here. Hey, Rick and Ben.
Hey, Maddie. Hey, take it.
Ben, let's go to you first. What's on your note cards this week?
For sure, yeah. So this week, what interested me about those two topics you mentioned, DOGE and tariffs, was the kind of revenue side of it that was present in both. In terms of the DOGE side, Trump and Musk reiterated promises this week that DOGE will cut $1 trillion annually. It will cut the federal deficit in half. And then on tariffs, the word Trump used yesterday in terms of the revenue coming in there was staggering. He wouldn't quite say $1 trillion, he was asked, but he said it was going to be a staggering amount. It's very much TBD how much it actually raises. There's a lot of fact checking we could do there. But what it interested me about that was that there was a third headline you didn't mention today that essentially sort of points to the fact that this money, whatever it is already been spent to a certain extent by lawmakers on Capitol Hill who are looking at taxes and sort of averting what could be an effective tax hike at the end of the year. I won't bore you guys with kind of House budget reconciliation instructions process this week, but the headline from that this week is that Republicans are setting aside at least $4.5 trillion over the coming decade for the tax cuts, and others say it should be even higher. The good budget watchdogs at the Committee for Responsible Federal Budget say that could lead to $4 trillion in additional debt when you take in sort of the pay-fors that are in there, even though that there's a big gap there. And the emerging GOP case here is that DOGE will pay for it, tariffs will make up that gap, regulation cuts will lead to economic growth that will do that gap. But it's why for my note card, at least this week, I didn't do any of those three. What I did was the national debt, because we can talk through what we know about the news this week, but what we do know for certain is that the national debt, the $36 trillion national debt, isn't moving at all. It's sort of scheduled to go upwards depending on how everything shakes out this week, and that is clearly not in the crosshairs, no matter how much Elon Musk is able to do or how high tariffs are able to go.
Hey guys, that all sounds pretty important, but why are we not talking more about straws? I mean, this is really the big news of the week. I think that everybody wants to know about the presidential order on plastic straws. So in case anybody might have missed this, this order, Trump signed this week, requires the development of a national strategy to end the use of paper straws within 45 days. I mean, I got these from New York. These are socialist New York paper straws, and I won't have to deal with.
But Rick, can you even imagine a more important policy for the swaths of Americans worried about inflation?
Forget about the national debt and these tariffs. I mean, come on, we need better straws. Okay, so I was very excited when Trump signed the straw order, but let's go back to the geeky stuff that's on Ben's note card. I think when everybody's hearing about DOGE is looking at this agency, DOGE is looking at the next agency, I mean, there is sort of a through line here. There is kind of a strategy, and the strategy is to go agency by agency and find pennies under the cushion, if you will, that Trump can use to finance these tax cuts that are coming at the end of the year. So Ben is following all the weedy stuff about the reconciliation process in the Senate and stuff like that, and he's doing good updates on that. But what's really going on here is they're trying to find enough money to offset $4 trillion, and it could be a lot more than $4 trillion. We can talk about that later if you want.
Could be 11.
But that is really the big story in DC these days.
Well, I think what's really interesting too is that all of this policy this week comes during a critical week for markets. And that is a key economic data point we got this week: CPI, Consumer Price Index, coming in hotter than expected. What that means in human terms is that inflation is running a little hotter than the Federal Reserve wants. Inflation is a little bit stickier than expected. We have a really interesting note from Bank of America's Michael Hartnett this morning saying that the pricing pressure, it might be a blessing in disguise because it could put a lid on Trump's ability to have tariffs go too far, that maybe Trump will have to keep tariffs in check because we already have record-breaking inflation that the Fed has not been able to tamper down to its 2% target. And does that mean that Trump has sort of a check on his ability to go as far as he may want on tariffs? I'm interested in what you guys think about that, because from a market perspective, stocks are rallying off the back of this idea that we still have time to negotiate on tariffs, and that Trump may be sort of caught on the back foot when it comes to his ability to go as far as he may want on tariffs. But Ben, when you talk to sources within the administration, I mean, I don't know that that is necessarily true. The market might be missing something.
Yeah, well, I think the bottom line with tariffs here, and this is the sense you get from folks here in Washington and the administration, is that Trump is trying to promise all things on tariffs. He wants it to be a big revenue raiser. He wants it to be a way to lower trade barriers and do this. He wants it to be all these different things. He even had a tweet this week that somehow tariffs were going to lower interest rates. So there is a sort of clearly he has a plan that he's laid out that isn't going to happen in its full form. And the question is essentially what version of that comes through. Does he have to go all the way forward for the kind of revenue reasons he's talking about? Does he scale it back because of these inflation and market reasons you're talking about? How does that all come together? What I think the sort of takeaway for markets to be is that these sort of ideas of 25% steel and aluminum tariffs, reciprocal duties on the whole world, 25% duties on Canada and Mexico, and the 10% duties on China that are already in place, not all of that can happen. And the question is sort of how is it pared down, and sort of how does it balance all these competing things he's trying to do?
Something's going to have to give here, guys. Trump's tariffs, I mean, they are a tax on top of the regular cost of these products. I mean, they just push prices up, and they push costs up and prices up. You can't argue with what a tariff is. You can argue about the dynamic effects, who ends up paying the cost, but they are inflationary. And Trump is not going to get everything he wants, to put it in Ben's terms. So he said something earlier this week and he has been saying since he took office, I demand lower rates. Lower interest rates. The president doesn't get to demand lower interest rates, and higher interest rates actually go with higher inflation. So Trump is not going to get lower interest rates. He's going to get higher interest rates. He's not going to get lower inflation. He's going to get higher inflation. And meanwhile, I contend that the main message voters sent in the 2024 election is we want President Trump to get prices down, not to push prices up through tariffs or renegotiate the entire global trading system. People basically said, I want lower prices. And we actually have prices ticking up a little bit. We have this situation with eggs and the avian flu. I mean, egg inflation is up more than 50% year over year. And last time I looked at my store, eggs were $11 a dozen, and if you could get them. So Trump has had almost nothing to say about this. Luckily for Trump, eggs are not gasoline. If it was gasoline that was up 50% year over year, it would be a national crisis, and Trump's approval rating would be in the low 40s or lower. But people don't depend on eggs as much as they depend on gasoline. But Trump needs to start paying attention to this stuff.
Rick, do you think tariffs can be the new gasoline, as you put it? You had a really interesting survey of Yahoo Finance folks this week about how people view tariffs, and they're pretty clear about the tariffs can increase. Do you think that there's a moment coming where people are going to see tariffs as Trump not just not dealing with lowering prices, but actually actively raising them?
This is the whole game that Wall Street is playing. So Wall Street has been discounting Trump's tariffs plans from before he took office. And the gamble, which is still why you are still seeing stocks are pretty buoyant, is that Trump is threatening all this stuff, but he's not actually going to do most of it. This is just a means to an end, and the end is some other kind of outcome. So, I mean, Trump is really playing a game of chicken here. I mean, he is threatening to push prices up, and he has already imposed some tariffs which are going to put some prices up. And the game he's playing so far is, will people notice? So the tariffs he's put in so far, just to remind everybody, 10% on everything from China. That's not huge, but it's not nothing either. And
It's
then
not nothing, yeah.
20% on steel and aluminum. And that is going to show up in higher costs for automobiles, higher costs for food that comes in aluminum cans. So I think Trump is betting that people are not going to see this on store shelves. But if he goes all the way, people are going to see it on store shelves. So we all wait to see what does the chess master really have in mind here?
Yeah, and it's interesting. I spoke with a source this week who broke it down really well. She was talking about how something like aluminum tariffs, a tariff on a specific part of a product could increase prices for consumers in her calculations by about 0.1%. But those tariffs that you're talking about on finished products, something like a 25% tariffs on everything imported from a certain country, that could increase prices by 1.5%. So just a very significant difference when you're thinking about and calculating the impact of the different tariffs coming out of the administration. And lastly, I'll just quickly mention I did a story this week on the impact on a can of beer, specifically beer that's imported from Mexico.
Not beer. I'm dying here.
I know. Rick, I'm going to send you the story. You're going to watch it and you're going to give me great
Anything but
feedback.
beer.
I know. It's hard
Yeah.
to calculate, obviously, but it's something that these companies like a Constellation Brands are really going to have to contend with, because some of these brands that have been importing beer from Mexico are some of the best performers, the only growers in the alcohol category that's really been under pressure. So are they going to pass those costs on to consumers and risk losing their spot as the superior beer brands in the United States in a struggling sector right now? Or will they just eat those costs? And that is the big question. Of course, as you mentioned, Rick, Wall Street certainly discounting the idea of those costs getting passed on to consumers and any inflationary impact of those. And instead, as always, the street just passing on and looking through the optimistic lens of things. But we are going to have to take a quick break here on Capital Gains, but we will be right back with Garrett Watson. We're going to talk tax policy and more capital gains right after this. Welcome back to Capital Gains. We are now joined by Tax Foundation Policy Analysis Director Garrett Watson. Garrett, it's great to have you on, and it's perfect timing because I got a question in from a Yahoo Finance viewer last night, specifically about taxes. So I want to start there. He said, look, you guys cover the policy so well, but I just want to know how this is impacting me personally. How could any tax changes from the current administration impact taxes for just average Americans? What can you tell us about what that outlook is looking like?
Well, thanks, Maddie. I think the big thing is with everything going on in Washington right now, folks need to keep an eye on the ball, which is we have what is a $4 trillion plus tax hike potentially coming at the end of the year. The 2017 tax law that cut taxes for many folks across the country is scheduled to expire for individuals, and that's going to be lining up with a big tax cliff that folks will see impacting them as soon as the beginning of next year with withholding and estimated tax payments. And so that's what's really motivating a lot of what Congress is doing right now. A lot of the discussions in the White House is how to avert that. And the challenge before Congress and the White House is how to balance that, addressing that issue with all the other items before them in terms of dealing with the national debt, trying to get some spending over to the border, dealing with deregulation and energy. There's a lot on their plate and a lot for everyday folks to follow over the coming months, but that's going to be the single biggest thing that's going to impact folks' pocketbooks coming into the next year that we're going to have to watch closely.
Hey, Garrett, I wonder if you can bring us up to date on some of the promises Trump made, in addition to just extending the tax cuts that are supposed to expire. So no taxes on tips, no taxes on overtime pay, no taxes on Social Security benefits. Ben wrote a story listing, I think, 12 or 13 of them. So does Congress seem to be making progress on passing those tax cuts or not?
So a couple of things there. One is there have been several bills put forward in both the House and the Senate to try to come up with some design for these ideas. So the one that's probably most mature and has the most runway ahead of it is the idea to exempt tips from income tax. Several bills there. But there are other priorities that the White House is leaning on. They reminded folks in Congress about that in a meeting at the White House about a week ago. They still want to see an exemption for Social Security benefits from income tax. They want to see overtime treated better under the income tax, maybe a full exemption there. along with other priorities. And so the trick for Congress is they need to be able to fit that in mathematically with all the arcane rules to pass, particularly through the Senate. And right now, it appears the priority, for the most part, is getting those 2017 tax cuts permanent. The political challenge, of course, is for a lot of folks, everyday folks, that's just keeping the status quo, right? That's keeping the current policy in place, but the president ran on further cutting taxes. So, to the extent the White House really pushes forward on making those a priority, Congress is going to have to listen and make room for those. But the math is pretty challenging here. Some of those may end up on the cutting room floor or potentially made temporary, so that math ends up adding up.
Hey, Garrett, what are you hearing about salt? The math problem is pretty difficult there. This 4.5 trillion number we saw this week from the House Budget Committee. A lot of the commentary on that was that can salt fit in that, and if it can't, can this pass? What are you hearing on that front?
So, in my view, the compromise position has always been that there needs to be some sort of cap, if anything, because it's quite a bit of money. We're talking about hundreds of billions or over $1 trillion over 10 years. So that's a significant offset. But there are many members of Congress, particularly in the House, who want to see it be made more generous because they feel like that existing $10,000 cap on salt deductions is too onerous for their constituents. So we may see that made more generous, potentially a doubling for married filers because that $10,000 amount is applied to everyone, and that creates what's known as a marriage penalty in the tax code. The trick is there a compromise that everyone can live with that both makes that budget math work and satisfies the demands of this constituency? And then there are other side issues, right? How to deal with, there are various workarounds that states have created. Does Congress try to deal with that to undermine the cap? Do they look at, business salt deductions? That's something that apparently a few committees in Congress have been looking at. That will all have to be set up as well in one integrated whole. And the question is, do we get support across all of the branches of government to sufficiently get that in the package? Because that is one issue that could sink this whole thing if folks draw that as a red line and there's disagreement.
So, Garrett, if you're just a regular person listening to this, you're hearing, okay, Trump wants to raise taxes on one hand through tariffs, which is going to make some products more expensive, but now he wants to have these other tax cuts on different types of income. What is, how have you guys gotten to the point of netting this all out? Is this likely to be a net gain, net loss? Some people will win, some people will lose. How do you tell?
So that's a great question. I think it comes back to what y'all were talking about earlier, which is how serious and how far does the president go on tariff policy? We provided estimates that basically assumes the president goes all the way, that he fully fulfills his campaign promises and goes ahead with a 20% universal tariff, a 60% all-in tariff on China. And what we find there is a substantial portion of those tax cuts are offset in terms of both their positive economic effects and the results in American pocketbooks for many Americans. And so that is just one scenario, though, right? That's the maximalist scenario. If the president uses this more as a negotiating tool or sort of holds back and tries to apply this more selectively, that story gets a bit more complicated, right? And I think that's more of a story of winners and losers. Certain folks in certain income categories, depending on their consumption habits, may end up ahead or behind. And that can complicate the political picture as well for Republicans on the Hill who are trying to sell this as a major boost to both economic growth and the pocketbooks of everyday people. So it does, I think, introduce another source of uncertainty, right? We talk a lot about business uncertainty with the tariffs, but it also introduces uncertainty for everyday folks on the cost side of things and how taxes end up netting out for their pocketbook in the coming year or two.
Yeah. Hey, Greg, does the reciprocal news we've had this week, in your view, change the landscape on these universal tariffs that you mentioned in your last answer? Basically, this idea of 10%, 20% duties on the entire world that Trump has long talked about, and I can tell you economists are most worried about. Does the move towards reciprocal, which the White House won't say that this means universals off the table, but does it, in your mind, does it kind of limit that possibility?
I think you're onto something there, Ben, which is there's been a debate about whether or not the White House would try to go forward with a simpler, more universal approach that may be a bit more sweeping or try to be much more selective. And you could see this discussion of reciprocal tariffs as a move in that latter direction, particularly when you look closely at the order the president signed yesterday, they're going to look at 4 different factors, some of which are pretty ambiguous, to determine what tariffs apply, ranging from whether or not a country has a value-added tax, whether or not there are non-tariff barriers that impact American companies disproportionately. So that leaves a lot of leeway for the U.S. Trade Representative and for the White House to pick and choose under those criteria what applies or doesn't apply, which could, on the one hand, limit some of the impacts for American consumers. On the other hand, that does have the risk of creating a political bonanza where you have companies coming in and asking for exemptions under these criteria that both makes the situation complicated and uncertain and can create political winners and losers on that side of things.
Garrett, I got about a minute left for you. I want to get your take on corporate tax cuts because I spend a lot of time talking to investors who say they're more than willing to look past any tariff impact because they're so excited about the bullish potential of corporate tax cuts and the impact that could have on corporate earnings, which of course would be good for furthering the bull market that we are currently in. What are you hearing about corporate tax cuts, and when can we expect to hear more about those corporate tax cuts coming into place from this administration?
A lot of the focus on the corporate side has been on trying to maintain a lot of the 2017 tax law policy for immediate expensing, better treatment of R&D expenses, interest expenses. That's keeping a lot of the status quo or bringing back policy from the last few years. The president has also been both campaigned on and brought up trying to make the corporate rate more competitive, down to as low as 15%, focused on domestic investment. So I think that latter piece is somewhat novel. We had a similar policy in the past to try to encourage domestic investment. The exact design details, I think are the big question. How do they do that? Is it similar to the deduction we had in the past for domestic investment? And can they fit it into the broader priorities in Congress? There's a lot of folks in Congress who I think want to see more done on the corporate rate. But that's the question: is it left on the cutting room floor? And then the other specter is, do they try to offset it through other changes like business, state, and local tax deductions? That would also complicate the situation for corporations, many of which may not take that trade. So we'll have to see if those details move forward in the coming months.
Yeah, it's really interesting and certainly something that we're going to continue to monitor, especially, again, as I mentioned, I continue to hear from investors about the importance of those tax cuts. So it's certainly something that investors are excited to hear more about as we move forward here, Garrett. But we are out of time, so we're going to have to leave it there. Thank you so much for joining us again, Garrett Watson with the Tax Foundation, joining us on Capital Gains. And that's going to be it for
Garrett.
this episode of Capital Gains. Thank you again to Garrett and Rick and Ben, of course, for being here. Make sure to like and subscribe to Capital Gains wherever you get your podcasts. And until then, we'll see you next time on Yahoo Finance.